Bismillahirrahmanirrahim. Subject is Principle of Auditing, and today's topic is Auditing Procedure. Agenda for today's lecture is the operation of audit, procedure affecting audit, and conduct of auditing. Moving further, operation of audit. The audit work is operated with the help of the following technique. First is ticking. Ticking means to the placing of mark against an entry in the book to denote that it has been examined by the auditor for certain purpose. Various shapes or various denotions can be used in ticking. So if we are checking that any entry in the accounting system, we can denote checking of addition, posting, carry forward, tracing, extraction of balances. Ticks are generally put in removable pencil, although some auditors also use pen and ink for this purpose. For consistency, usually auditors develop their own denotions for the tick. Other technique is casting. Casting refers to the checking of addition of book of accounts and financial statement. It is necessary that arithmetical accuracy be checked so that fraud and error may be detected. This job is normally done by junior member of the audit staff. Most of the auditors use mechanical appliances or adding machine to check casting of the book of account. In modern day auditing software are used in order to record the financial transactions. So auditor don't use these old technique to cross-check the arithmetical accuracy of book of accounts and financial statement. For example, in financial statement, if there is any on the face of financial statement, let's suppose inventory figure is being checked with the book of account, the auditor may use a software which gave him in a fraction of second the arithmetical accuracy. So these casting this type of technique is now converted to computer operation. Even auditor have their own software which are integrated to the financial software of accounting of the firms. In this way they can check easily any arithmetical accuracy or any error in the financial system. Calling over means a sizable part of work of audit consists of comparison of entries and two or more book of entry in the book with its supporting evidence or voucher. For example, if we are going to verify any fixed asset, let's suppose vehicle of the company, the auditor will do that there is any auction is available that the company gave in a or in a tendered advertisement is there in the original record. Then any comparison or any quotation or sealed bid is there in the original record. Any comparative statement have been made by the accountant, then purchase order have been placed by the company, and then invoice have been sent by the company, and then payment. So these all things are corroborated the existence of any vehicle which are showing in the accounting record. This is usually carried out by two junior auditor internally, one reading the item to the other. Care should be used to see that the whole or of the important detail of each item is checked and not merely the amount. Special care in checking posting to personal ledger is needed is the names and title of the account. Otherwise, wrong posting may be remain undetected. Clarity in pronunciation is essential. This may be confusion between 90 and 1960 and 16. Thus, it is advisable to pronounce 90 as 90, 60 and 60. So these are some examples for the in order to understand the calling over process. As I mentioned earlier, that these are the technique developed by the old auditors. Nowadays, it is not necessary that there is any need of calling over in order to ensure the accuracy of the posting. Once entry have been entered by a single person, it is in a software, it is approved by other person, then it is approved by another person through software by their respective ID and passwords. So calling over is not needed nowadays. This is vouching. It is necessary functions of the auditing in a today audit. Voucher is to authenticate an entry, and auditor must satisfy himself that it does exist. It must correspond in a date and account to the entry in the book. It must be in the respect of the client, and the entry must be corrected passed in the books of account. The act of vouching consists of checking the documentary evidence, invoice, cash memos, bills, receipts, vouchers, minutes of the meeting, reference to any legal documents such as contract, should establish the accuracy and fairness of the entry appearing in the book of account. It is not so the matter are noted for discussion. If the auditor still remain unsatisfied, an outstanding matter are reported to the shareholders. So watching is necessary because in watching the auditor oftenly checking external documents such as invoices, such as bill, purchase order, such as payment, such as check, such as any legal contract that ensure the entry in the book of accounts of the company. The other technique is verification. Verification is come after vouching, because when the auditor satisfied and vouched all the entries appearing in the book of account, his duty in the book of account means even a software as well that are used in recording the financial transaction in the company. So it is a duty not thereby to fully discharge. If the appointed for audit under the Company Ordinance 1984, the auditor to report whether or not the balance sheet show the true and fair view or not. So for this purpose, the auditor satisfy himself and need to follow certain rules, such as each asset and liabilities as correctly valued or not. He should consider it and correctly stated in the face of the balance sheets. Assets actually existed or not, it is the duty of the auditor to ascertain it. The other point that should be considered in verification is that the auditor is the property is owned by the business or not, it is a property of the business or not. Another point that the asset is suffering from any charge. Charge means it is in the mortgage of the bank or such type of any other right of lien, etc. should be checked by the auditor. If there is any such type of charge on the asset, he should disclose to the shareholder. Reporting is the technique when watching and verifications are carried out by the auditor. The auditor will submit a report to the shareholder. The form and contents of the auditor briefly discussed in earlier lecture, I guess in lecture 2 or 3. Excuse me. And depend on several factors. Legal status of the appointing authority, the contract for the scope of the work done by the auditors. If the auditor comes under Company Ordinance 1984 or Banking Companies Ordinance 1962, or Insurance Law 1938, the point to be considered while drafting a report in respect of sole trader and partnership concern will deal with the length and separate chapter of international standard on auditing. So there are different type of reports. We will consider the nature and scope of the audit. Moving further, modern day audit procedure are below. Examination of accounting system. Accounting system by means, this is what we call is SAP, standard accounting packages, Oracle Financial, or any other OC, OF, Oracle Financial. It is a huge ERP, enterprise resource planning, which include everything including accounting system. So the auditor first examine this system, that which system is in use. Then the auditor will also consider internal control. Internal control will be discussed in later chapter, but it is a whole system that check or examine the efficiency and adequacy of the system, that accounting that policies and procedures are being followed or not. So if there is efficient accounting, internal control, the auditor and then confident on the system. This is a third part, that auditor should first check watches on sampling basis in order to make his opinion and see that proper internal control are being followed or not. If proper control is followed by the company, then the auditor will use less extensive procedures in their audit. Then after this, the auditor will check what verification of two things, assets and liabilities in the balance sheets. These items are checked for verification, that balance sheets, and other two are revenue and expenses. These four things are checked and verified by the external auditor. After completing these steps, then external auditor submit a report to the shareholder. If the report format and contents of the report depends on the scope and nature of the audit. If the auditor is appointed in order to give true and fair view on financial statement, then the auditor will report to the shareholder. If he is being appointed for any special assignment or for compliance audit, he will give report to the management. Procedure affecting the audit: compliance procedures, substantive procedures, and analytical procedures. First, we will discuss substantive procedures. Compliance procedures. These tests are designed to obtain reasonable assurance that those internal controls on which the audit relies is to be placed in effect or not. It means that the company is complying with or in line with, these are, let's suppose, written document, internal control, and this is compliance. Means each and every internal control are being followed and spirit in letter. Then the auditor decide about their substantive procedure in conducting an audit. Substantive procedures, this is a second step. These are designed to obtain evidence is to completeness, accuracy, and validity of the data produced by accounting system. These are two type test of details of transaction and balances means when each and every vouchers are invoice or receipts or check, each transactions details are checked, it's called test of detail. Then second is analytical procedure, analysis of significant ratio and trend indicating the resulting investigation of unusual fluctuation in time. For example, this is a sale of 12 month. It's normally same, but in April sale have been rise or it is abnormal. Then when test is applied, ratio has been calculated. The April month is more susceptible than the other one because the ratio shows that there is a sale ratio to asset is very high in the April. Why it is high? The auditor use, then you will be susceptible and use very detailed audit of this month. Analytical procedures there is used to describe the analysis by the auditor while while to reduce the work of the audit. Analytical procedure is the third steps in procedure of audit. So audit procedures are affected by three things. One is compliance, second is substantive, and third is analytical procedures. Conduct of audit. Following are three ways to conduct an audit. First is continuous audit, then interim audit, then final audit. We will discuss it in detail one by one. Continuous audit, it is also known as running audit. Under such type of audit, an auditor required to visit a business house at intervals during the financial year and check the books to date as far as possible. Ruling, why it is called running audit? Because the auditor visits the premises of the client and more frequently. It is a continuous audit. Visit the company audit at certain stipulated interval. Stipulated interval means which is written in the contract that the auditor should come weekly, it should come monthly, it should come bi-monthly. So it is on the basis of continuously the auditor goes and check the record of the company. This type of audit is practical when the final account should be ready, should be desired to be ready immediately after the close of financial year, is in the case of banking companies. Or the second case is a running audit when the business is extraordinary large and need more time to be checked. When in business hours, monthly or quarterly final account are required throughout the year. So these are two reasons that why continuous audit is desirable or required. Moving further, what are advantages of the continuous audit? Is the books are checked soon after the entries have been made. Error can be spotlighted as well as rectified more quickly. Similarly, fraud can be detected in early stage. It imposes checks upon fraud because of the reason that books are kept up to date and a moral check is exerted on the staff. The third benefit is the accounts are kept up to date and an audit can be completed more quickly and accounts can be presented to shareholders soon after the closing of the financial year. Close contact with the business. The auditor, while practicing this type of audit, can have greater contact with the transaction of the company. In this way, he can consider all the important points, and there is a less chances of neglecting any important matter. So, and third one is fifth one is proper attention. Auditor has ample time before finalization of the account. Greater attention can be paid to the checking of account and detection of error and fraud. Moving further, continuous audit. Disadvantages. Since the audit is basis on running basis, when auditor check any books of account and the person concerned in the company become sure that auditor have checked his book and he may change his figure. There is a possibility of alteration in figure either ignorantly or deliberately after they have been checked by the auditor. In this way, error or fraud cannot be detected without further rechecking, which is rarely have been carried out. Second is interruption of work. Audit is conducted for several years. The auditor may lose the thread of work and omit to follow up transaction completely, which may have been left upon on the management, and management are interrupted on frequent basis. The third one is inconvenience. The frequent visit up by an auditor and his frequent checking may dislocate his client work and cause inconvenience to them. The thread of the work is also been likely to be lost. And the last one is expensive. Obviously, this type of audit is comparatively more expensive as the auditor makes several visits and perform detailed work involving more time being spent over there. How to overcome these disadvantages? First one is take special step to stop alteration. How it is possible? It can be possible through clear check or taking note when the auditor leaving the premises of the client, and he mentioned that these books and these items have been checked and these are their final figure as per auditor record. Examine alteration. If the auditor find any alteration, then we should first check for these closing figure that he have been taken in a note. Well-developed program can also overcome these inconveniences and interruption of the work. Checking of one area must be finished in one time, one area, so that this area have been not replicated. If there is any query by management or any other person, it should be noted. Auditor should communicate their last task to their boss so that they have a proper record that what have been finished in the client premises. It will reduce these disadvantages of continuous audit. Interim audit. Interim audit lies midway between final audit and continuous audit. In order to know The reliable trading result of a business are part of the year. The proprietor may arrange or the shareholder may arrange for carrying out an interim audit to carry out during the year, monthly, quarterly, or half yearly. For example, if the director of a particular company desired to pay interim dividend after a certain period, for example, 9 months after the date of financial closing, the interim audit may be conducted. As mentioned that interim audit conducted in a special circumstances, new company accounts, half annual report, etc. What are the advantages of the interim audit are that it enables the final audit to be completed on time. Second is the auditor's suggestion can be implemented quickly in the interim audit than in the case of final audit. Through interim audit, work can be satisfactorily done by staff among with advice of the auditor. Third is in the audit of the large and important concerns, means big organization, some form of interim audit is almost important or necessary in order that sufficient amount of detail checking may be done. In large organizations, sometimes interim audit is become necessary. Final audit. This is sometimes called statutory audit because in law it is necessary. It is called sometimes called also final audit or audit of financial statement. Once the complete audit is one which is started after the close of accounting year of the business and is carried out till the completion of the until the completion of the audit. It is also called balance sheet audit or periodical audit. So annual financial statement are audited in a final audit. It is also called statutory audit as well. What are advantages? So auditor is given full information about the years and enable him to view an accounting system and financial statement. Full information are being provided at one time so that he have a comprehensive view about financial statement and accounting system. Which we discuss in continuous audit, nobody have a chance to alter their figure because the audit is for the year which have already been closed. Whole work is performed in one go and communicate a comprehensive report to the shareholder. This is all about today's lecture. Thank you. See you in a coming lecture.